you wake up to news like this as a money manager. How do you feel about it?
Well, it's a tragedy, of course, and you just hope that the people that are unaccounted for are brought back safely, hopefully. But from an economic standpoint, it's too early to tell. It's nothing like we faced during COVID when we had severe shortages of components throughout the entire automotive supply chain. We can get the parts here through other ports. It just might take a little more time, and it might be a little more expensive. But that's how I would think about it, but not a material impact to the tech ecosystem anyway.
Well, quite. I mean, I remember so many days spent at the port of Los Angeles, literally days and weeks down there. Part of that story was inflation. Mm-hmm. Right now, we're trying to tie together what's happening in the economy with the tech sector. How closely are you waiting on the Fed, and how nervous are you each day, Denny? I know you're not a very nervous person about inflation and what the Fed's when the Fed's going to pull the trigger.
Yeah, I think what's happened with inflation is it's come down a lot. There's still some sticky elements to it, and maybe we don't get as many cuts from the Fed as we thought we might towards the end of last year. But nonetheless, I think the direction of travel is that the Fed will start to ease at some point. It's just that pace of easing might not be as aggressive as one might have expected a couple months ago. But that's good for stimulating the economy.
Denny, we're here to talk about technology, and I think we cannot do that without speaking about Nvidia. Mm-hmm. It's an important name for you and your fund. We're soft to 0.6% right now. There's a brilliant story on the Bloomberg. Nvidia traders find reasons to worry beyond sky-high stock price. I know that the gain in the price is something you have reacted to and you consider, but the logic outlined in the story is that a lot of the potential gains from Nvidia, the feel-good, it's been brought forward and happened in a very condensed space of time. Just give me your thesis on Nvidia right now.
Yeah, absolutely. So if we actually look back to last year, it was something similar. Most of the gains from the stock actually came in the first half of the year, and particularly Q2 after it really became known just how big of a supply-demand imbalance that we had for GPUs. You could argue this year maybe the same thing has happened. I mean, the stock's put on $1 trillion in market cap since the beginning of the year. It's pretty much unprecedented. But what's important about it, and I think this is what makes it hard from an investor standpoint, and that is the reason the stock's gone up so much is because earnings have gone up so much. If we go back 18 months ago, I think the street thought Nvidia might earn somewhere around $5 a share this year, and that's probably going to be closer to $25. So the stock, actually, if you look at the earnings multiple on 2025, it's actually still quite reasonable. Now, we can argue what might happen as supply-demand comes into balance, but nonetheless, the demand profile out there remains unprecedented, and the valuation remains reasonable.
We're showing some animation of Blackwell.
Yep.
How big a moment was Blackwell for you?
Yeah, it's actually a big moment because it's a continuation of how NVIDIA has been innovating over the last several years. And importantly, a couple things. It really focuses on price performance and power consumption, which are two big issues for GPUs. I mean, it doesn't get as much attention, but power is probably the single biggest constraint to deploying inference across the global economy because of just the inability to get enough power into these data centers. And then you have to cool them as well. And, there's a lot that comes along with that. But the other thing is, Blackwell is going to be less expensive than the H100. And so that also shows you NVIDIA's confidence that the visibility that they have into demand, that they can actually start lowering the price despite there effectively being no elasticity in the market.
So that's my final question on NVIDIA. I was in the room for 90 minutes with Jensen, and he basically said, starting this year, the data center business is $250 billion per annum. But he was talking about growth rates of 20 to 25%. What's still not clear to me is the tipping point from where the majority of that is training to inference. Because I don't think NVIDIA's talked as much about inference. AMD came out really hard with the inference story. Just how much did you buy, I guess, the soft guidance that he was giving?
Yeah, it seems reasonable. And actually on their last call, if I remember correctly, they actually talked about inference now has crossed over half of workloads relative to training. Now, AMD needs to talk about inference because Nvidia's pretty much won the training market. And so the next prize out there is inference, and inference is going to be multiples of the market opportunity that training is, because this is how you deploy it. It's like developing something and then putting it into production. That's what's going on with AI workloads right now. And so that should continue to be a really healthy tailwind for the ecosystem as a whole.
The other story or data point I was watching overnight is China's iPhone shipments fell 33% in February. It's a name that you have a smaller position in. But it's really interesting. I mean, let's just focus on corporate Apple and China. Is that a data point that worries you?
Well, it's not surprising. And it's not surprising because over the last year, you've seen China actually retaliate somewhat to the restrictions that we've placed on them for all of our most valuable intellectual property as it relates to the semiconductor ecosystem.
Right, there was the reporting this week from Bloomberg that the Chinese government was basically trying to get any server designs that power government compute to use domestic semis going forward.
Yes.
But sorry to interrupt.
No, but that's exactly right. And so what they're doing is they're trying to find ways where they can actually exert some power and some market influence. And that's really tough for Apple because they're saying no state-owned enterprises. They're starting to extend that. So it's incremental demand loss in one of the most important markets for Apple globally. Now, India is starting to take the baton, grow faster. It's a large market. They don't have the purchasing power that actually you have in China, not nearly as mature, but that should help out. But nonetheless, China's a tough market for Apple, and they're inextricably tied to China because of the supply chain as well. And so you can't even replicate their supply chain.
And we point out Apple's only down 0.1% on that news at the data point. This last week's been fascinating. We have been talking about Apple a lot on the show in the context of antitrust, DOJ suit, but also what came out of Europe with the DMA probe. And for the first time, I'm thinking back to last Thursday, the stock falling 4% on a DOJ suit, investors seem to be saying, wow, there is actually a real antitrust problem or risk to the stock here. Is that a concern you share?
Yeah, for a couple reasons. And it's not just the suit that the DOJ brought against Apple. I know the stock reacted to that, or the digital market case in Europe. But it's also the Google TAC case on search. You know, Google pays somewhere between $20 and $25 billion a year to Apple. That is 100% gross profit that drops to the bottom line. So it's no surprise they actually potentially are doing a deal with
gets a lot of praise on his bottom line management as well. So it's a pressure point.
Exactly. So I think you got to look at it from both angles. It could, that could be bad for Apple. It could actually be good for Google because Google doesn't have to pay as much TAC for that placement on the iPhone. But for the first time, what you're seeing is the DOJ go after and say, like, look, it's all right to have a monopoly. It's not all right to exercise abusive power with that monopoly, and that's really what the government's saying. The thing that's interesting about it, though, is as a consumer, you actually opt into that monopoly if you buy an iPhone. And so in some ways, you could argue Apple's case on that side of the ledger is actually pretty strong versus compare that to the Google case where it's default on an Android device and then they're forcing you in to the Google Play Store. That doesn't seem as valid as what Apple should be able to do given what it's provided to consumers and the benefit that they get.